Afternoon traders, hope you're doing well. Hope you've had a great trading day. I must say, a very quiet start across the board in terms of market movements, especially in FX. But remember, we do have those all-important PMI figures coming out tomorrow, so do bear that in mind because markets will likely rally on those figures. But on to then the reason why I feel that the euro is in for a correction lower in the weeks to come. Well, this is mostly revolved around the ECB's Recovery Fund program. So just to jog our memories back, in May earlier this year, we had ECB executives come forward and basically push this proposal, which is composed of 750 billion euros, 500 billion of which is in the form of grants, and the remaining 250 billion in the form of loans. Now, obviously, this would be used to support all 27 European members of the ECB in terms of providing them with monetary packages or money packages so that they can roll out respective physical stimuluses across their respective economies and help counter the impact of COVID-19. Because you have to remember, obviously throughout this whole situation, economies across the board have suffered from a huge reduction in consumer behaviour in terms of spending and borrowing. Obviously businesses as well taking massive losses there, especially retail businesses, and that's led to thousands of employees, if not tens of thousands of employees being cut off. So just a number of different problems for all these economies across the board, which really reinforces the need for this package. But the problem is, and the real problem here is that ECB members just cannot come together to unilaterally make a decision. If we go back to February, Euro was the worst G10 FX performer. And why was that the case? It was the case because European members, again, could not come together and unilaterally agree on a stimulus package, which led to countries like Italy suffering from a massive outbreak of COVID-19 and not having that aftercare support, which they should have had. And it was for that very reason right there that the euro sold off quite heavily. And then in May earlier this year, as I said from the start, we had these executives come forward and push this proposal through, and it gained a lot of support from European members, which is why we saw the euro sort of rally towards the upside up until now. But the issue now, again, is there are certain members who are looking at their economies, are seeing a gradual recovery, and are questioning the eligibility of this emergency fund from the ECB. They're questioning if they actually need it or not. Because remember, this 750 billion is not going to come from thin air. This is all debt. And as you can imagine, a lot of these European countries already have high levels of debt. So if your economy is recovering and you feel like maybe in half a year's time or towards the end of the year that the economy will be in a much more stronger position, then you don't really need to take on unnecessary debt. So, you know, that's the problem that's really starting to come up into play here. And in mid-July, it said that the ECB members, all 27 of them, will come together once again and they will have it out in terms of negotiating whether or not they want to proceed with this or not. So how's this going to affect you then? Well, put it this way, if there is no agreement, and in my opinion that's probably going to be a very high likely case, then the rally that we've seen in the euro from May onwards, that's going to be reversed. And if anything, we're going to dip even lower than that, because we have to remember that markets always will go back to equilibrium. If they've priced in a factor and suddenly that factor is removed, then 1 plus 1 no longer equals 2. So the markets will reverse on that and it will go even lower due to the fact that of course, this optimism over this recovery fund has now been removed.